Hello, everyone. Let me know if you can hear me okay. Right before the call, my very expensive podcast mic broke. So I'm doing this via my computer audio. So hopefully the sound is not too bad. And also, y'all, I have a whole presentation for y'all, and I will be doing a live Q&A at the end. But just for the sake of time and everything, if there are questions that you have as I'm going through the presentation, if you can just type it in the live chat. And then at the end of the presentation, I'll go through the live chat and see what questions came up. All right, so welcome y'all to the Trading in Today's Market Masterclass. This is going to be an updated, pretty much strategy talk about how the market is not the same as it has been years prior and how we can capitalize off of the changes. So the outline, this is what we're going to be going over today. I have an intro. We're going to be going over trading styles, today's market, scalping, intraday trading, and swing trading. So first, starting out with the intro, I'm just going to read over this. In today's stock market, we are seeing a new level of volatility that wasn't as common in previous decades. Unlike the slower, more predictable movements of the past, modern markets are characterized by rapid swings both upward and downward. Major advancements in technology, algorithmic trading, and 24/7 access to global news have all contributed to this shift. While the swings can be dramatic, the larger, more frequent rallies often outpace the declines, creating an environment ripe with an opportunity for those who can adapt. If that sounds like gibberish, I will be showing you guys a visual of what this means. So we're slow and steady once ruled. The modern market rewards those who are fast and steady. So the market has pretty much gone from slow and steady to fast and steady, which means more money for us and more opportunities for us. Traders need to stay nimble and aware, reacting quickly to market changes, whether it's a sudden surge in tech stocks or a brief correction. The ability to capitalize on fast movements is crucial. The days of holding for long periods without active management are fading as the market's dynamic nature calls for hands-on approach. Being fast no longer means being reckless. It means being steady and strategic in executing trades at the moment. In this masterclass, you'll learn how to leverage all three trading styles, scalping, intraday, and swing trading, to profit from today's fast-moving market. Whether you're looking to make quick gains in minutes, capture price movements throughout the day, or take advantage of larger swings, which are larger trends, over the next few weeks. This course will show you how to navigate the volatility and thrive in an environment where speed and strategy go hand in hand. These are the main trading styles that I'll be going over, and these are the main trading styles that you will hear if you are a trader and in the trading community or thinking about getting into it. But first, what is a trading style? A trading style refers to the approach or strategy a trader uses to buy and sell financial instruments like stocks, options, or futures. It is shaped by factors like the trader's goals, time commitment, risk tolerance, and the length of time they hold positions. Each style involves a different way of analyzing the market and timing trades, and it suits different types of traders based on their preferences and objectives. So it's scalping. That's the first one we're going to touch on. Scalping is a very fast-paced trading style where traders seek to make small, quick profits from tiny price movements. You can make these quick profits from these tiny movements by having a lot of size or a lot of money invested into these trades, but you're not holding them for long. So you're often holding positions for only seconds or minutes. Scalpers make multiple trades in a day, you don't have to, relying on high volume and tight spreads to accumulate gains over time. Intraday, which is also known as day trading. Day traders buy and sell positions within the same trading day, closing all positions by the end of the session to avoid overnight risk. The goal is to profit from short-term price movements during market hours. So day trading basically means that you are opening and closing a position within the day. And then last but not least, you have swinging. This style involves holding positions for a few days to several weeks, aiming to capture price swings or trends in the market. Swing traders analyze market momentum and technical patterns to capitalize on short to medium price fluctuations. So swing trading is a more passive way of trading. It's my favorite way to trade and what I have gone back to primarily. This does involve holding trades overnight. You are not necessarily interested in all of the volatility throughout the day. You're more so interested in catching swings and movements over weeks and several days at a time. With the trading styles, the different trading styles, there are different time frames that you're going to look at with candlesticks. So candlesticks are pretty much this right here. Each one of these candlesticks represent a time frame in the market. Depending on which trading style you have, will depend on the strategy that you use and the candlestick time frame that you look at. For scalpers, they're looking at the 1 minute, the 5 minute, and the 10-minute candlestick time frames. For intraday traders, they're usually looking at the 10-minute, 15-minute, and 1 hour. I wanted all these to have 3 for the sake of it looking aesthetically pleasing, but intraday also uses the 30-minute time frame a lot as well. So 10-minute, 15-minute, 30-minute, and 1 hour. Swinging. Swing traders primarily use the 1 hour, the 4 hour, and the 1 day candlestick time frame. The higher the time frame that you're looking at, the longer you plan on holding the trade, because you're looking at a movement from over a longer period of time. So here's where we get into how today's market is not the market of yesterday's. And this is the real screenshot of the S&P 500. This on the left shows what the S&P 500 looked like from 2014 to 2018. And then on the right, it shows what it looks like from 2020 to 2024 as of today. I took the screenshot today. So these 2 4 years patterns, it may not seem like this is a huge difference, but it is a really big difference. From 2014 to 2018, we had slow and steady growth. I don't have the prices on the screenshot, but you can see that from 2014, which is back here, to 2018, it's not a huge price difference in 4 years. The strategies that were used a lot, basically pre-pandemic, were stock share investment strategies. You buy stock shares and you hold them. You just buy the dip and hold, buy the dip and hold. It was a very simple strategy. It works. It was a very slow and steady wins the race type of market. So all these little dips were just opportunities to buy more shares and just hold, because the stock market continues to go up. And that has been proven ever since the stock market started, which I believe was in the 70s. So now, post-pandemic, 2020 to 2024, the stock market has just gone crazy in a good way for us as traders. So we could see from like the swing low back here, which was the pandemic, the height of the pandemic, which was March, April 2020, to where it is today. This takes up a lot more of the screen vertically. This shows that we made a huge difference in price in these last 4 years. And I'll get into the percentage gains that we've had over the last 5 years and over the last year. But you can just see on the chart that we have had steeper growth in these last 4 years. We've had deeper pullbacks as well. Like in 2014 to 2018, we had these sharp pullbacks for just a moment, and then we recover. Here we have periods of pulling back and recovering, but overall going up. And so this type of volatility makes it so that even more strategies work in today's market. We no longer have to just rely on stock shares, buying and holding, just be patient type of strategies. Those still work because the stock market is still going up. So buying stock shares is never a bad idea. But as far as trading, we have a lot more options because we have a lot more volatility. Volatility equals money opportunities. Volatility is a good thing. Even these pullbacks are a good thing because it allows us to get in at even better prices. The fact that we have a larger daily moving range means that we can make more money when price is moving more in a day than it once was before. So all the volatility is good. It may seem scary at first, but it's good when you know how to make money off of it. So here's a written out version of what I just said. The stock market has changed. 2014 to 2018, we had steady growth. During 2014 to 2018, the S&P 500 experienced steady, consistent growth supported by a low interest rate environment, stable inflation, and relatively low market volatility. This period saw slow and steady gains as the economy expanded gradually, and corporate profits grew. With fewer large market swings, there were occasional corrections, but the overall trend was upward with moderate year-to-year returns. Now, 2020 to 2024, we had increased volatility. The market became much more volatile with sharp, wild swings, both upward and downward, The COVID-19 pandemic in 2020 caused a sudden market crash followed by a rapid recovery, which was driven by an unprecedented government stimulus and ultra-low interest rates. This period also saw large rallies, particularly in tech stocks in emerging sectors like AI. However, inflation concerns, aggressive rate hikes by the Federal Reserve in 2022, and geopolitical tensions have led to more frequent and severe pullbacks, with bigger upswings typically outpacing the downsides. So in summary, 2014 to 2018 was steady growth. In 2020 to 2024 has been defined by rapid price movements and much more volatile trading environment, rewarding quicker and more adaptable strategies. So for those that are new, completely new to the trading world, you're probably wondering, why has it been over the last few years, you keep hearing about traders this, traders that, stock market this, stock market that, even though the stock market's been around? It's because the stock market has changed, and the stock market is now extremely favorable for traders. So that's why there's been such a boom in traders. I mean, I started in 2020 because I was just hearing about it so much. And people were trading before the pandemic. It just has never been as profitable as it is now because the market has never been as volatile as it is now. So here are the three things that you're really going to want to look at when it comes to the stock market and the performance. And when you're getting into trading, these are my recommendations on what to trade: SPY, QQQ, and a tech stock. Now, you can choose any tech stock that you like. My personal favorite is NVIDIA. Here is the performance summary for SPY, QQQ, and NVIDIA. SPY, which is the smaller version of the S&P 500, which is a snippet, which I showed you guys a snippet on this screen here. That's the S&P 500. The SPY is the more affordable version of that, basically, but it's the same chart. SPY is up 20% year to date. So from January to today, October 9th, it is up 20% already, and the year's not even over. And it's up 93% in the last 5 years. That's huge. QQQ is up 18% year to date and is up 155% in the last 5 years. So QQQ, think of QQQ as the tech-heavy version of SPY. So SPY is all of the 500 major stocks combined in the ETF. QQQ are the tech stocks combined in the ETF. NVIDIA, which is a very AI-driven company, they're making huge advancements in AI and chips and computers. NVIDIA is basically like the new age Microsoft. NVIDIA is up 160% year to date, and it's up 2,674% in the last 5 years. So NVIDIA is my favorite for many reasons, but mainly because of this type of growth. This type of performance is insane. I definitely have been playing NVIDIA daily trading. It has a great movement as well for everyday trading, for scalpers, intraday, and swing. So now let's actually look at the charts. This is my personal SPY chart. I have marked this up with some support and resistance beams, and then I also have some trend lines on here, and I also have some indicators that I have hidden. These are the candlestick timeframes that I have on my chart. When I go out to the daily, you can see that we have been steady going up. Currently, we just broke another all-time high today. We are currently at the highest that we have ever been on SPY as of today, as of the close of today. So when I say that the market is very bullish, forward steaming ahead, this is what I mean. We're currently breaking records. This is great for swing traders. This is what I've been doing recently, is just buying calls on the dip and holding. It's becoming a very foolproof strategy. It's basically treating the market now like how stock share investors were treating the market back then. I'm just doing it with call options, so I make bigger returns on it. Even when you have these pullbacks, they are just opportunities to get in at better, cheaper prices. The options contracts go on sale, stock shares go on sale. These dips are good things. These dips do not mean sell everything, panic sell, go short, that's not what that means. This is a very buy the dip market. And for some reason, that statement is considered controversial, but it's in the charts. It's a buy the dip market. So that's SPY. QQQ, very similar path, but QQQ has deeper pullbacks than SPY, is what I've noticed. Still on this very steady and steep uptrend, but the pullbacks are deeper, which for me, again, is a good thing. Getting in at these support levels and riding it up. Where SPY is actually breaking its all-time highs as we speak, QQQ is not. QQQ has about $8 left to go, actually $10 to go to break its all-time high, which was back in July of this year. But again, fast and steady is the name of the game. NVIDIA, this is the favorite tech stock that I mentioned. Its chart is a little bit more complicated, just in the sense that I can't necessarily confidently draw trend lines on this chart. This chart works best with support and resistance, and then your favorite indicators depending on the time frame. And I'll get into indicators in the masterclass as well. But right now, NVIDIA is currently approaching its all-time highs and its resistance on my chart. So I have recently, as of yesterday, closed out my NVIDIA calls because I'm anticipating a pullback or a breakthrough. Either way, I want to see what happens first before continuing with my swing calls. That's why it's so important to not only track your chart, but to make sure you have your chart marked up accurately so that you know when support and when resistance is coming. So NVIDIA is definitely something to have on your radar. For a while, it was just pretty stagnant. And then as of this year, 2024, once they started announcing all the AI stuff, it really took off. And it actually had a 10-to-1 split, a stock split, a couple months ago. So it was actually trading at $1,400 at one point. So they went ahead and split it and divided it by 10 because that was just too high. Because they split, the stock shares are of course cheaper, but also the options contracts are cheaper as well. So now is the time to get into NVIDIA, because I personally believe that NVIDIA is going to go back up to the thousands. It may take a couple years since it's now in the hundreds because of the split, but needless to say, the price is cheap right now. All right, now let's get into some of these strategies. First one, scalping. Get in and get out. That's the name of the game with scalping. You're getting in, you're getting out, you're not overstaying, you're welcome. Time in the market. The goal with scalping is to enter and exit the trade within 2 or 3 candles. Given that you're working on the 10-minute, 5-minute, and even 1-minute candlestick time frame, you are not in your trade for very long at all. The indicators that scalpers will find helpful are the VWAP, a short-term moving average, so like a 9-week moving average, the RSI, and the level 2 order book. Now, these first 3 I use. The last one I'm not too into, but I know a lot of people swear by it. So I wanted to go ahead and add that on there. Level 2 order book. It is going to depend on what broker you use if you have access to this. Let's go over a scalping strategy. This is using the VWAP indicator. The VWAP pullback strategy is a very popular strategy. First, identify the trend relative to the VWAP. If the price is consistently above the VWAP, it indicates a bullish trend. So I'm just going to be talking about bullish because that is the most profitable way to trade in today's market, is bullish strategies. You can't make money on the pullbacks, on the drops, on the sells, all of that. But the most dependable and profitable is going to be bullish strategies. The VWAP can also act as a mean reversion level during sideways or choppy markets. A point to that, when the market is choppy and moving sideways, I never recommend trading, especially not scalping, because you're just going to be chasing candles, and that's where you can lose a lot of money. You want a clear trend when you are day trading or scalping. So you wait for a pullback to the VWAP. During an uptrend, you wait for the price to pull back to the VWAP line. Enter when price touches or approaches VWAP so that it acts as support. And VWAP is just a little line. It's just a line on the chart that pretty much acts as support and resistance for the time frame. Then you confirm the pullback with volume or candlestick patterns. Then you enter the trade in the direction of the trend. The trend is your friend. That is a very common quote in the trading world. Do not go against the trend. Another reason why I'm stating that bullish strategies are going to be your best bet because the trend is bullish. So in an uptrend, you enter a long position or buy calls with trading options once the price pulls back to the VWAP. Now you can set your tight stop losses, place your stop loss just below the VWAP. This keeps your risk minimal. And take quick profits. Since this is a scalping strategy, the goal is to capture small price movements quickly. Set a profit target based on nearby resistance or support levels, or exit the trade when the price moves a few points away from the VWAP. And again, this is just one strategy. And I go over this in detail in my Market Money University course. I have a whole tutorial on VWAP and how to use it. Intraday. This is the day trading strategy. So the little motto I have here is it's all in a day's work. The time in the market. In intraday trading, the goal is to capitalize on price movements within a single trading day. But unlike scalping, the trades typically last longer, often spanning multiple candlestick patterns. Intraday traders work with timeframes such as the 15-minute, the 30-minute, or the 1-hour candlesticks. The objective is to catch larger price swings that develop throughout the day. While intraday trades can last for a few minutes to several hours, positions are always closed by the end of the day to avoid overnight risk. The indicators that day traders will find helpful are long-term moving averages, longer-term moving averages, the RSI, Ripster clouds, the MACD, and Bollinger Bands. These are the main ones. Here is an intraday strategy using Bollinger Bands. Bollinger Bands mean reversion strategy. And with the Bollinger Bands, it's very easy to identify this as well because it's very colorful, it's very detailed. But you identify the overbought and oversold conditions. When price moves towards the upper band, the asset may be overbought, signaling a potential reversal to the downside. So don't trade it, wait for it to come down. When price touches the lower band, the asset may be oversold, indicating a potential bounce to the upside. That's your time to get in. Look for candlestick reversals at the bands. This has to do with candlestick patterns. I have an entire dedication to that in Market Money University as well. There's a lot that goes into candlestick patterns. You may also hear something called a price action trader. Price action traders are those that pride themselves in not using any indicators at all. They just look at candlesticks. They just look at candlesticks and can just literally read and essentially predict what the next candle is going to do based off of what the current candle is doing. And that takes a lot of time, a lot of skill, a lot of screen practice to be able to get that good. Go long when the price hits the lower Bollinger Band and displays signs of reversing upward. So this could be confirmed with the bullish candlestick pattern or increasing momentum if you're using a volume indicator. Use the middle band as profit target. The middle band, which is typically the 20-period simple moving average. So another reason why I like the Bollinger Band so much is because it has clouds, essentially a VWAP, and moving averages built in. So it's a lot of different indicators kind of built into one. Once price begins reverting towards the middle band, you can exit your trade when it approaches or touches this level. Set stop losses outside of the bands. So essentially the band is just like a big bubble that shows how high price has been and how low it's been. And so price typically stays within that, especially with the day. So that's why this is within the day. That's why this is a good intraday strategy, because every day price has a high and a low. And these bands kind of showcase what's the high and what's the low. As long as you can stay within the bands, you should be good. So if it goes outside of it, that's where you can set your stop loss, because that means it's breaking and going against your position and your risk tolerance. Swing trading. Like I mentioned before, this is my favorite way to trade. It's the most passive way to trade. Some people say it's difficult. Personally, if we're just talking about just personal preference, I personally think that scalping is the most difficult. But I hear so many people that come from scalping and come from day trading over to swing trading that say that swing trading is harder. So it's really going to depend on you. The motto with swing trading is it'll get there eventually. So the time in the market In swing trading, the goal is to capitalize on price movements over several days to weeks. Swing traders work with longer time frames, typically using daily or 4-hour candlestick charts. The objective is to catch medium-term price swings as the market trends or moves within a range, allowing for larger profit potential comparing to shorter-term trading. Unlike day traders who close positions by the end of the day, swing traders hold their trades overnight. Indicators. These are the indicators that a lot of swing traders swear by, including myself. 200-day moving average, so very specific moving average, Fibonacci retracement, MACD, and support and resistance. So here's a swing trading strategy using Fibonacci retracement, which you may have heard of before, Fibonacci. You first want to identify the overall trend. That's pretty much the first step in anything. Identify the overall trend. Start by determining whether the market is in an uptrend or a downtrend on a higher time frame. So because this is swing trading, you want to zoom out, go to the 4-hour, go to the 1-hour, see what the trend is, and confirm that we are in an uptrend. In an uptrend, the goal is to buy during a pullback. Draw the Fibonacci retracement levels, which is the indicator. It draws it for you. Select the most recent swing high and swing low in the trend. And the common Fibonacci retracement levels are, there are different lines that have different percentages on them. The golden ratio is known as the 38%, the 50%, and the 61.8%. And again, that's written on the indicator, so you don't have to do any math or anything like that. Next, you want to look for a pullback to the key Fibonacci levels. Wait for the price to retrace to one of the key Fibonacci levels, usually the golden ratio, which is what I stated. These levels often act as strong support and resistance. 38% suggests a shallow retracement, while 50 and 61.8 indicate deeper corrections that can offer stronger buying or selling opportunities. You want to confirm the setup with price action. So price action comes into this as well, because if price pulls back to these golden ratio levels, but the candles are, huge bearish engulfing candles and just breaking through levels, then you want to take that into consideration, that it's not actually bouncing off of these levels. Price action, aka candle movement in real time, has to showcase that these levels are acting as support and that price is actually bouncing off of it for you to be able to confidently get into the trade in the direction of the main trend. Enter a long trade if the price finds support at a Fibonacci level during an uptrend. For stop loss, place a stop loss slightly beyond the next Fibonacci level below for a long trade or above for a short trade to protect against a deeper pullback. Profit target using extensions. So there are extension levels on Fibonacci. I won't necessarily get into that in this class though. So here is my offer for you guys before we go over the live Q&A. I have Market Money University, the Options Crash Course, Forex Fast Track, and my Discord group. With Options University, you will learn options, Forex, futures with over 25 hours. It's actually 27 at this point, because I added the Options Crash Course and Forex Fast Track to Market Money University. So, and those are both a couple hours long. So it's really over 27 hours right now. There's over a dozen step-by-step strategies. So today I showed you guys the written version of 3 different strategies on these orange screens. But in the course, I share and showcase over a dozen visual video tutorials for over a dozen strategies for stock options, Forex, and futures. Okay. There's a 50-question quiz in the course along the way. So after each segment, I have a couple questions for you to answer. It's graded just to make sure that you're understanding before you continue. And if you don't, then you can retake it and all those things. So it's really set up like a school. And I did all of the quizzes myself based off of the content. I do upload weekly Zoom call recordings. So I do live weekly Zoom calls in my Discord group, and I upload the recordings into the Market Money University. So those go in there either Sunday night or Monday morning. Quarterly updates. I'm saying quarterly updates because that's what it's been so far. So far, I've been doing quarterly updates. So that's what I plan on continuing to do. Every quarter, there'll be an update, and you have lifetime access to the course. And then Options Crash Course. This is my latest offer. You will learn 1 profitable stock options trading strategy using my indicator in under 2 hours. And that is currently $55. And then Forex Fast Track for all my Forex people out there. You will learn one profitable Forex day trading strategy using my favorite indicator in under 2 hours. So both of these are day trading courses. This is for people that just want to skip the fluff and all the other stuff. Maybe you already know how to trade. You just want to learn one strategy. These are day trading strategies. And I go into deep detail of just this one strategy for each. And then my Market Money Multiplier Discord group. You can access my trade ideas when I get in and out of certain trades, my market analysis, Q&A, and the live weekly Zoom calls. And all of this can be found on my website, marketmoneymultiplier.com. So when you scroll down, you see the online course. This is the university. And then it takes you to the Thinkific course site, which is what I host my course on. And then if you scroll down more, you'll see the mini courses that you can get here. Now, let's go over some questions. The Discord group can trade alongside you. Yes, alongside me is really, I feel like more so with day trading. So since I'm not really day trading like that anymore, it's not really alongside of me, but when I enter a trade, a good trade, I put that in the Discord. You guys can trade with me, but I'm not sitting on the charts looking at the trades, like, because my swing trades, I get in and I hold it until it hits my profit target. So you don't really need to be looking at the screens for them. For a newbie, this is beneficial and sort of earn as you learn type of flow. Yes, so one of the things that I do with Market Money University is in the first couple of modules, I get everyone set up on a demo account for all of the trading instruments. Stock options demo account, Forex demo account, and a futures demo account, so that when you're learning, you can be practicing on demo. So yeah, I really do like the earn as you learn type of model when swinging. Do you recommend a daily check of the charts or how often? So yeah, with swinging, I mean, I look at my trade account probably multiple times a day, but out of curiosity and just to see, oh, do I want to close out now or do I want to hold? So I'm looking at my Robinhood, my Webull, and Trade Locker multiple times a day just because I'm kind of obsessed with it. But as far as the charts, I look at it in the morning and then I look at it at the end of the day. And by in the morning, I mean before the market opens. But now that I'm primarily swing trading, I'm no longer like just staring and looking at the candles move. Hi, Jasmine. Can I use the old course of Forex that I have purchased and buy the fast track Forex that you have now, or should I just purchase the fast track Forex? Yes, if you have Forex Mystery School, you can log into that. Forex Fast Track is brand new. The information in Forex Fast Track is not in Forex Mystery School. So both of them will be beneficial to you if you are a Forex trader. Any other questions, y'all? In the multiplier program, options, Forex futures, is it more in-depth and taught? Yes, very in-depth. It's 25 hours. It's 25 hours of video content that's been edited. Like I edited it down and it's still that long. So it's very, very in-depth. You're not going to be able to rush through it, but it's good because it teaches you everything. What do you like to do to get over overthinking when it comes to trading? I'm in the course, but kind of scared to start due to money. So with overthinking, yeah, there's two types of FOMO with trading. There's fear of missing out with like, you want to chase every trade, and there's fear of losing money. You don't want to chase every trade, you don't want to lose money. It comes down to risk management and risk tolerance. If you are just naturally not okay with risk, trading is like not it. You know what I mean? It's just not it. You either have to be okay with risk or not be a trader. You have to be okay with some level of risk. And with proper risk management, knowing, okay, how much can I afford to lose? How much do I need to make to cover my losses? And when you get really calculated and strategic, it kind of overrides overthinking, because overthinking is just like, okay, I don't know what I'm doing, so I'm going to think about all the bad scenarios. But the more you know, kind of, for me at least, gets rid of some of the overthinking, because I know what I need to do and I just got to do it. You just got to pull the trigger. But tight stop losses in the beginning will definitely help with kind of getting started and getting comfortable with risk, because essentially trading is risking your money to make more money. That's what it is. Now, there are very, very low risk strategies, and then there's higher risk strategies. You know what they say, the higher the risk, the higher the reward type of thing. But the best thing for you to do is to start with the low risk strategies and practice risk management with tight stop losses. And then eventually that overthinking will start to go away. And mini course, is it set up on a demo account? Yes, the mini course is set up on a demo account for both options crash course and Forest Fast Track. Forest Fast Track, I'm using Trade Locker demo. And then in options crash course, I'm using Webull demo. And for Discord, can we talk to you in there? Yes. So Discord members get priority access to me, whether you ask a question in a group setting or direct message in Discord. People in Discord, they always DM me their charts and stuff for me to look over their charts. So I do a lot of chart analysis in there. Any other questions, y'all? No problem. But thank y'all for joining, and y'all have a great night.